before we really dig in, Beth, I think it would be helpful if you could clear something up for our audience here.
Okay.
People think Land O'Lakes, they think butter.
I know it. We love that. We love the butter. Fat is back, people. Butter is healthy.
But what are you doing? So what are you doing at a tech conference?
Well, everybody does know our heritage brand, Land O'Lakes, founding of the company 1921, Upper Midwest dairy farmers trying to get power in the channel and move their sweet cream butter into the population centers in the East. And today, we retain farmer ownership. We are a co-op. We are owned by farmers. We are a food production and agribusiness. We're a Fortune 200 company, about a $15 billion top line. We start right on the acre. We work with technology, with insight-driven technology, data analytics, with farmers and growers. We also own Purina. We feed 100 million animals a day. We feed all the exotic animals. And then we, of course, have our heritage brands in the dairy sector. So we go really from the farmer, all the way to retail. And we are an insight-driven tech business, especially as it comes to working with farmers on the acre.
So can you explain that? So what kind of data are you collecting from those farmers and how are they using it? Maybe you could give an example of that.
Yeah, we have applied research plots, for instance, where we're working with farmers to help them understand how they should plant, what kinds of things they should plant, different soil types. We also use predictive models, and we focus specifically on in-season technology or in-season models, and I think that that's really important this year. This year, many of you have seen, we've had dramatic issues with weather across the country. Many farmers couldn't get planted, and that means that they have a huge issue. We have a gap in production, and more importantly, these farmers have been in a situation for multiple years where they have had low commodity prices, they have had struggles in their rural communities, they have had struggles on the acre. So these predictive models, this data that we're capturing, and we're capturing farmer data, what they planted, what soil types, what their processes are on the acre, and we use that in conjunction with and in alignment with our applied research plots to provide a model for them for what they may want to do, what they want to do in season. Do you want to apply, some kind of a spray? Do you have an issue? Do we need to get a soil sample? Do we see a disease state? And so this model, we're using all sorts of imagery, analytics, but their data is their data. We capture their data in a data silo. We pair it with our applied research plots. We use predictive models. We use satellite technology. We use drone information. Many of these things that allow us to advantage a farmer, and never has that been more important in the United States, especially than this year, where we have had dramatic issues, drastic issues with weather.
Okay. Are farmers wary to give you their data?
It's a great question. Thankfully, we are a co-op. We are farmer-owned, and the data is their data. And we make it very clear to them, while we will capture their data, we will not use their data unless we have permission to use their data, and we may use it from a modeling perspective, but they own their data. Of course they're reluctant, right? It's like all of us. Well, what are you going to do with the data? What kind of data? We've been using it and leveraging it, by the way, as well on sustainable production. We have a Truterra insight model that allows us to work with a farmer to improve their sustainable production. So are they wary? Yes. Do they understand the value of it? Yes. And we've been working with them for many, many years, and so we have a significant amount of data, and we make it clear to them that they own their data.
Okay. So Sara, you have an interesting model. You work with everybody but the farmer. So explain why that is. That would be really helpful, I think.
Yeah, well, we work with everyone but the farmer, but we definitely work for the farmer in the sense that the reason we exist as a company, as Grow Intelligence, is to, make the system around the farm a lot more efficient. So what we do is we take large disparate data sets that have anything to do with agriculture that have been captured anywhere in the world. We transform and translate all of that data, normalize it, and essentially build a series of predictive models that let us forecast anything from supply to demand to price for any agricultural commodity anywhere in the world. And why that becomes important is that, if you take this year as an example and we talk about the struggles on the farm, well, you have about 10 million acres that have been abandoned this year due to floods. That's about $6.5 billion lost revenue. That's before the revenue that farmers would have lost because of really low yields that they're going to have. You need to enable a financial system and a financial architecture that's going to allow to warehouse that risk, protect farmers, and enable markets to function regardless. And when you think of this at a global scale, it becomes somewhat of a daunting task because the world still works and operates on a financial architecture that was put in place in the 1930s. And so part of what we're trying to do is change that and change it really at a global scale.
So you think it's really the system around the farmer that's broken?
Absolutely. I mean, if you think of who sells to farmers, so you have input companies, seed, crop protection, fertilizer, banks who sell them loans or insurance products, and then you have intermediaries who are trading that product, and then you have food and beverage companies or retailers buying that product and getting it to the consumer. You need to have an efficient communication mechanism whereby they understand the real-time supply and demand dynamics so that they're better managing their businesses. When you have that type of efficiency, that will translate to a lower cost of capital for the farmer. That will translate to people and the industry understanding what's happening at a farm level way more dynamically, which you need to manage risk.
So you were a commodities trader before you started your company. How did you even get the idea for this?
Beth and I were talking about this. So both of us came from the energy industry and somehow ended up in ag. So I used to trade oil and gas. And the analogy I gave was, you would have an oil or a gas producer come and say, geologists have told us that there's this much proven reserves in the ground, and I need money to go develop this. Can you come and buy, my natural gas or my oil 20 years forward? And I knew how to price that risk, and I would give them that money in advance for them to be able to go develop that plot or that essentially that unit. And what happens there is that I am able to transfer the risk to the marketplace. That allows me to then enable them to produce. Now, if you take the most liquid market in agriculture today, it's US corn. If you can get a 2-year hedge and sell 2 years forward, it's a miracle. And so how is it that an industry that's been around for over 12,000 years is still struggling in our way in terms of how we actually allocate capital? And if we can't come up with longer term capital allocation, we actually can't even start to have real conversations around how we change the food system, which is conversations we have every day today. Right. We can't change that until we change how we finance it.
So Beth, but you were mentioning some pretty sophisticated tools that farmers are using. But you've also talked about how some farmers lack the most basic technology like broadband. How can we even, how is that impacting the industry? How can we get to that next level?
Yeah, I appreciate you bringing this up, and I appreciated Fortune's willingness to let me push out an op-ed on this. I've lived in cities for a significant portion of my adult life, but come from Iowa originally. And what I think everybody needs to understand is this shared destiny for rural communities in rural America with cities. 19% of the population in America is in rural America, and they comprise, by the way, 44% of the armed services. They're willing to stand up and do the hard work. Right now, rural communities are underinvested in at a significant level. It is really challenging. Many places don't have broadband access, and I'm not just talking about the farmer's ability to leverage the tool. It's their ability to raise a family in these towns. We need vibrant rural communities. So they're driving their kids to the McDonald's restaurant and parking lot so they can get broadband access so that they can finish their homework. We've got a shortage of 40,000 doctors in rural America. We have an opioid crisis. 3 of 4 farmers or farm workers have been directly impacted by the opioid crisis. So we have a significant challenge in rural community that is not getting better, and this year we're seeing an acceleration, of course, because you've had disastrous weather. So if you think about the communities that sit around farmers, right, the ability to invest in that community at the diner, the hardware store, all of those things, the school, it's really related to farmers' profitability, and farmers have not been profitable for a significant period of time. And then you have broad geographies that lack broadband access. So their ability to access telemedicine, to finish their schoolwork, have robust entrepreneurs go and invest in their towns. It's simply not there. So I oftentimes come to tech conferences and I'm so excited about the future. But I want to bring us all back to some reality of this situation where 25 to 30% of farmers don't have broadband access. They're using hotspots, they're trying to use their phones. Their kids can't have a robust and their communities don't have a robust and vibrant life because we have not invested in these communities. And we must invest in these communities. It is a shared destiny. These are the communities that are feeding the populations in the cities and around the world. So I have a significant concern about it. It is where, again, we are farmer-owned. My farmer members live in these communities. I am frequently out in these communities. And you know, it's interesting to me, it's not a mystery what our farmers want and their families want. They want the same thing all of us do. Access to good health care, good education, invest in their communities, vibrant. And they aren't wanting to move. They want to be right there doing this work. This is the hard work. But they want investments in their communities. So I do speak to this because it's important for technology forward, but it's important just for a robust, vibrant rural community that we need to be all paying attention to.
So you both have brought up this crisis that farmers are facing this year. I think the median farm income in 2018 was negative $1,500. So
they're into their balance sheets now. They're living on loans.
So a lot of this has been due to extreme weather. Is that something that technology can really solve? I mean, we've seen, I think this was the wettest year on record in some regions. I mean, Sara, maybe you can speak to that. Is this something that technology can really help us with?
Absolutely. I mean, if you, you know, like I said, we as a company ingest all of these large disparate data sets, and then we react really quickly to market events to be able to build predictive models that can impact and enable industry. And one of the things that we have seen, you know, the past couple of years is just the sheer volatility of climate events that occur everywhere in the world. So we're talking about floods in the US, but Southern Africa this year had one of the worst droughts on record, right? And so you have these extreme shifts. So what it enables us to do is that we actually can look at a combination of satellite imagery with data that comes out of national statistical agencies to model real-time and model and build out real-time indices on whether it's drought or flood, and index that globally that lets people to start manage that risk. The thing is, we're not going to necessarily get away from the fact that it's happening right now because we're just being confronted with it, but we can manage it better. That means if you are a food and beverage company or you're a retailer, you have massive supply chain risk that's tied to the way that you procure. So California drought. You know, 70% of leafy greens come from one tiny portion of California. The next time there's a drought, where do you diversify that risk from? You can actually structure financial instruments that let you do that and manage that risk so you as a company can get paid out on a policy that then lets you use that money to go and essentially purchase product elsewhere in the world for potentially much higher prices, because that's what happens, right? Markets react to a decline in supply by increasing price, and organizations need to be positioned to be able to react to that and manage that so the consumer doesn't also suffer as a result of it, right? And so this is what I mean by, you know, that there needs to be real kind of a real re-architecting of the financial system that we have. And I think data can play a massive role in enabling that communication across organizations and the transfer of risk across organizations.
You know, to add on that, you know, one of the things we're trying to do, because change will happen in terms of building a robust and resilient food chain at the farm level. And so we've invested in something called our TrueTerra Insights engine, where we're working on the acre with the farmer. We're using their data, and we're using, over 1 trillion data points. And what we're trying to do is help a farmer understand what investment they can make to improve sustainable production on their farm while improving their profitability. So variable rate application of fertilizers, or you know, stabilizers, or no-till, or things like that that will improve the resilience of the acre and the farm in which they're working on, but at the same time improve profitability. And I agree, what we need to understand is what are the incentive structures that we want to put in place to incentivize a farmer who wants to continue to improve production on their farm, but at the same time is trying to make sure that they can be profitable in order to do that. So insights and data and analytics will help us, and at the same time we're working with our master agronomists very directly with the farmer with their data to help them understand how they can improve work and production on their farm.
So is there a reluctance to invest right now from farmers because they are in such a dire position?
You know, I'm always so impressed with farmers. They are the original entrepreneurs. They are unbelievably resilient and optimistic. I think you have to be an optimist, right? When you've got so much, it could be too hot, too cold, too wet, too dry. You can be a great operator. It can just, you know, all be wiped out. Is there a reluctance? This is why I'm always so impressed with them. 96% of farms are still family owned. There's always this narrative of big ag, big farm, but 96% are still family owned. And they are investing, and yes, they incorporate because they've got a big operation. They're investing as they can. We have had some exciting investments, for instance, from our dairy farmers in the Central Valley in California, where they're investing in digesters, partnering with the government there. And from that, they put in methane digesters. They get methane capture. They get clean gas. And it's then dropped into a pipeline. It goes down into Los Angeles and is used to run city buses. That's the circular economy. That's the improvement we can make. And they're willing to make that in partnership with us, with federal or with state programs. And I think that that is the future. How do we improve the resilience of production and at the same time make sure we understand the profitability for a farmer?
We're going to go to questions, and oh, we already have one. Great. If you could just wait for the mic to get to you, and if you could tell us who you are. It's on its way.
Oh, thank you. Hi, Joel Meyers, founder and CEO of AccuWeather. You spend a lot of time talking about weather. We provide highly accurate forecasts to a lot of the companies in the supply chain, but probably don't reach most of the farmers, so we ought to talk. Because back in early April, we said that there would be devastating floods. In fact, I made $400,000 myself in the futures market by going long corn and soybeans. But even now, we're predicting the corn crop will be about 13 billion, and USDA is much higher. We were in the low 13s when they were well over 14. So this kind of information you talked about, predictive analytics based on statistical, historical data, but you really need accurate forecasts over the next 90 to 180 days to get the most accurate forecast and prepare for the kinds of decisions that farmers have to make. Thank you.
I would agree. We use predictive models. That's what we say, and we agree. We do capture weather data. I won't use a competitor's business. Exactly. Agreed. So we do use predictive, and I agree with you. USDA came out with a crop report that I said, well, I don't know. I'm driving along the field in Iowa. I don't think that that's quite accurate because the corn isn't stalking at the normal rate. We're not going to see a robust harvest. You're going to see some challenges. I don't think the government will come out with their farm report until August. They're going to reset that number, and we'll expect it to trend down. You see the market reaction is already, to Sarah's point, you see this because the corn market is up above $5 and has been for a little while, so we'll see where that goes.
Great. We have a question over here.
Hello from Minneapolis, first of all. Sorry.
That's right. Represent.
That's right, exactly. Can you go a little bit further, Scott Beckett from Insigniam, can you go a little bit further on your conversation about rural? So obviously broadband infrastructure is big, and we also know this move from the counties and towns into the cities has caused the availability of people with the wherewithal to deal with these kinds of tools if we're able to get them there. To me, that seems like one of the two things that is really a structure. So if you could just take that a little bit further, it'd be great.
Yeah, I appreciate you asking the question because the thing is that there are so many problems, right? I pointed out healthcare. Medicaid expansion didn't occur. So, 78% of the counties in America that index as food insecure are in rural America. And so, the rural poor, the issues in rural poor, reimbursement rates in hospitals, that's another issue. Education, another issue. So, in my role at Land O'Lakes as the CEO and with our locals, our co-ops, in the local communities, I have to say, what are the problems we can solve and really push on? So awareness is central so that everybody understands these families, they want to live in their communities. Not everybody wants to move to the cities. Not everybody, this work is, if you're there at 3 a.m. and your manure pump breaks, and you're in a dairy farm, that's not pleasant work, but they want to do the work to feed a growing world population. Yet they need technology investment. Because I can't, in my role, push to solve every issue, but I know a foundational issue, like in the 1930s with FDR pushing rural electric, is access to technology that today I believe will be inefficient and tomorrow could be catastrophic. We need to solve some of these. We need to push from a policy perspective, from an investment perspective, and we need to push awareness elsewhere. We have a shared destiny in rural America and in the cities, and we need to remind ourselves of that. Food security is central to the security of the United States. And so this pillar of our security will be at risk if we don't continue to work at it. I could go through a list of other issues, but I think foundationally we need to get a technology investment initiative going on in rural America to close this gap.
Great. I think we have a question back here.
Hi, my name is Mark Johnson, CEO of Descartes Labs. And we're talking about disruption, especially based on information here. But if you look at the actual agriculture industry, it's highly consolidated at the top. You have 5 major grain traders. We went from 6 seed and chemical companies now to 3. There's a few equipment manufacturers. Where do you see disruption coming from, and who do you expect it to affect most in the agricultural industry?
You want to answer
Sara.
first, and I can go.
We had a little bit of this conversation this morning. So listen, I think it's part of, like you rightfully state, there's been a lot of consolidation at the top, especially in the system around the farmer versus at the farm level. But one of the things that I think is underappreciated is how decentralized the trading system continues to be. So if you look at the number of corn, soybean, sugar, and rice traders in the world that are physically trading those grains every single day across borders, there's over 100 million of them, 100 million registered companies that are in that trade. So where disruption is going to come from is when we are able to reach at that level and enable, basically that decentralized system to get access to very high quality data and information as well. Because then what you start to have is you start to have a completely different interplay across industry. That doesn't mean that it's going to be the fall of the big players, because there's a certain level of efficiency that also comes from that. I was born and raised in Ethiopia, and in some ways, I guess I don't romanticize what small means, because I've lived and suffered the consequences of what small also means. And so I think there's a balancing act, but I think a lot of disruption will come from the fact that the industry is still very large, is still very decentralized if we truly look at the numbers, and it gets consolidated at certain levels. But I think that there's a ton of room there.
Yeah, I'd say it's interesting because there are so many areas of disruption. So I could say, I am always asked about what about the trade situation? Okay, what's the strength of the US dollar? Then we see retail consolidation, retail pushing back through, doing what businesses do. They're going to try to go through and capture profit pools, so they're putting on their own processing, they're putting on their own animals. So omni-channel is at play, so we've got other investments happening. So local retailers who've normally been supportive of distribution into a farmer are now being disrupted by e-business platforms with distribution in rural America. So it's coming at the sector in a variety of ways, and the businesses are performing as businesses do when they're disrupted, right? They're looking for insight-driven advantages, connection with the farmer, and then understanding where the profit pools are so they can continue to invest for the long term. So there are any variety of drivers that are causing kind of the disruption in the sector right now.
Great. Sara, Beth, thank you so much for joining us. This has been great.
Thank you.
Thank you.